Good morning from our world headquarters in New York. I'm Manus Cranny.
And from our studios in London, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Back channels to Iran are open as the U.S. warns against escalation of the Israel-Hamas conflict. President Biden may visit Israel in the coming days, adding to the diplomatic push after Antony Blinken met with Arab leaders over the weekend. Elsewhere, the U.S. administration plans to tighten sweeping measures to restrict China's access to advanced chip tech, as Beijing steps up the efforts to support the country's fragile recovery. And on Capitol Hill, Democratic leader Hakeem Jeffries says House Democrats are having informal talks with their Republican colleagues about a potential bipartisan solution to find a speaker. Good morning. Yields are rising this morning in the U.S. as the bond markets are trapped between that vortex of the hell that is war and a defense and a hedge, and the reality of a higher and more aggressive Fed. Even though Patrick Harker says we've done quite a lot, yields rise by 6 basis points this morning. Don't forget, last week they did perform as the hedge. The 30s were down by 19 basis points and the 10s were down by 17. Now, you've had 4 weeks of a rising US dollar. This morning we're down by 1/8%. Again, what you have here is a big conviction call from Union Bancaire Privee. Peter Kinsella will be with us a little bit later. He still sees the yield differential as being the alpha for this. The euro dollar, by the way, JP Morgan, Global FX Strategy have moved their call from 105 down to parity. So again, the alpha of the dollar on the rates differential and indeed on a haven status remains. The oil market down by 0.5% this morning. What you have is, of course, as these back channels. What are these back channels? It rallied by 7% last week, 6% on Friday, and the hedge funds have slashed their bullish bets, Danny, on the oil market. So they are getting skittish in hedgeland. Good morning.
Good morning, Manus. I do think it is that back channeling that seems to allow us at least the hope that that can prevent escalation, has us nibbling around risk. S&P 500 futures up about 0.2%. Mike Wilson, though, the team over at Morgan Stanley are warning that the internals are looking worse. Therefore, the odds of a fourth quarter rally are down. RBC, for their part, says that so far the reception to the earnings season has been good. So a lot of differing opinions on this American equity market. Now, Europe had been able to start positively, at least in the futures trade. But when more liquidity came in, we started to fall. We're down about 1/10. But China, this is the big one, Manus, we're down 1%. Yeah. We did have Chinese officials stepping in with more stimulus and more measures to get stringent on short sellers. That hasn't helped us so far in the China equity session. CSI 300 down by 1%. Again, maybe catching up to some of the risk off that we saw on Friday.
Well, this week, Danny, I think it is going to be risk defined by China. Are you at the bottom of China in terms of the stimulus that comes? I think we are going to be controlled by what happens in terms of these back channels. What are they? Is there a de-escalation or is there full ground assault? And I think ultimately we will be redirected on the inflation narrative. But for the week's momentum, it is down to geopolitics of the Middle East and perhaps the bottoming of China.
Well, if geopolitics, Manus, means that we're going to be buying bonds, that's certainly going to be challenged by the inflation narrative. Sure, Harker says disinflation is in, but the UMich survey had inflation expectations for consumers at a 5-month high. And
that reinforces the higher for longer. Let's reset to our top story. President Biden is weighing a trip to Israel. The president warned against Israeli occupation of Gaza and said the U.S. troops don't need to be deployed on the ground.
Can you foresee U.S. troops in combat in this new Middle East war?
I don't think that's necessary. Israel has one of the finest fighting forces in the country. I guarantee we're going to provide them everything they need.
Let's get to Oliver Crook. He's in Tel Aviv. Oliver, the very latest on the Israeli ground offensive, it seems as if some back channels are in operation and some opening for exodus of the Palestinians has also been underway. What is the latest?
Yeah, so what we got this weekend was a sort of confirmation from the Israel Defense Forces that there will be a ground component at some stage in the next phase of this war. Right now, they've been focused on the aerial bombardments, which have continued through the weekend, and also trying to open up corridors, these sort of arteries that go down the center of Gaza so that civilians can evacuate from the north down to the south. They've had a sort of a non-bombardment clause on Saturday, Sunday, and Monday. And actually today, 8 till noon, they said they will not bomb, and that expires ceasefires right now. So the other issue in Gaza is it is very difficult for aid to get in and out. There have been some discussions about possible opening on the border with Egypt, but that has not yet been confirmed. We understand there are aid trucks lined up there. And then the attention is also going to the north. There has been more and more fighting on the northern border with Lebanon, not to a point that is sort of in full spillover, but it's something that people need to be conscious of. There has been a second aircraft carrier group by the United States deployed to the eastern Mediterranean. And of course, last night we had Chuck Schumer, Mitt Romney, a number of bipartisan senators here in Tel Aviv who gave a press conference espousing full support for Israel and saying that they're going to get something done in terms of aid from the United States.
Right. Well, on that note, Oliver, we have U.S. Secretary of State Antony Blinken back in Tel Aviv today after that trip across the Middle East. At this point, what are his top priorities?
So he's just landed in Tel Aviv, we understand. And so let's just remind everybody where he was. He was in Israel, then to Jordan, then the Bahrain, UAE, Saudi Arabia, Egypt. He's been talking to all of these leaders. And his priority really is a question of escalation as number one. Number two, aid in getting some of these corridors open in Gaza. But then also the question of hostages. And we don't get a lot of information on the hostage negotiations. Obviously, those are intensely sensitive. So there's some back channels working there. In terms of aid, we understand that the border crossing with Rafah with Egypt may open up. And we understand from Egyptian ministries that they are preparing for the possibility of a large influx in their hospitals of Gazans. And the question of escalation, this is about deterrence, yes, with Iran, but it's also about having a message with Israeli leadership. He said it on Thursday when he was here in Tel Aviv. How Israel goes about dismantling Hamas will be absolutely critical. And we saw that in full display with huge protests across the streets of the Arab world. And so these are all the things that he needs to bring back now when he's talking to Israeli leadership today.
And herein lies the point, Oliver. The word that I use and Danny used to try and put context around this for our audience, our global audience, understanding risk, is about back channels are open, and there is this effort ahead of any ground invasion to try and change the situation. But what are these back channels? Is Qatar the best hope? I mean, they are the home to the political office of Hamas. So is it the Qataris that have the power to shift the dial?
But we also understand, yeah, I mean, that obviously is going to be one of the main levers that the United States is going to try to pull. But we understand that there's also been efforts within the United States to back channel with Iran. We understand that the Saudis have been in communication with Iran as well. And also the rhetoric from Iran has been fairly sharp. Starting on Friday, they said that if this continues in Gaza, they could see another front opening up in the war. We heard from the foreign minister's office today from Iran saying that a new front could be limited not just to a specific border, but the entirety of what they consider to be Palestine. And again, we have a second aircraft carrier group coming to the eastern Mediterranean. And just to put a little bit of kind of contours around kind of what the threat from Hezbollah is to the Israeli state, there are thousands and thousands of rockets sort of disguised in southern Lebanon that Hamas controls, and that, you know, Iron Dome is fairly effective. We say there's about a 90% hit rate on that. But if you get thousands of rockets going over, you know, 10% of many thousands is still a lot. And also that volume, you may not get a 90% rate. So these are all the things that are front and center here in Israel, where we've been getting about 2 sirens a day since Friday here in Tel Aviv.
Oliver, thank you very much. That is Oliver Crook reporting live from Tel Aviv. Now, with the war between Israel and Hamas persisting, IMF Managing Director Kristalina Georgieva warned it's a very difficult time for the world economy.
What the fund is concentrated now on is to very carefully monitor what could be the economic impact of the new eruption of tensions in the Middle East. So far, what we see is relatively contained. Oil prices are going up and down, but there hasn't been a huge spike. Some nervousness in markets, understandably.
Joining us now is Bloomberg's Will Kennedy, Senior Executive Editor for Energy and Commodities. Well, thanks for joining. I mean, Georgieva talking there, no big spike in oil prices yet. Bloomberg Intelligence, Bloomberg Economics says that if there's escalation, it could get to 150. Where do we stand right now in the fragility of this oil market, dependent on what's happening in the Middle East?
It's a nervous market. On Friday, we finally saw quite a bit of buying, and we saw Brent rise $5 fairly rapidly. In the options market, we also saw people buying a fair amount of protection to oil going a lot higher. And again, gold also spiked. So you saw some concern going into the weekend that the war may escalate and that people should position themselves. Today's a lot calmer. You've described all the diplomatic efforts that are going on, perhaps to make sure that things are not quite as catastrophic as they might otherwise be, and oil market is waiting to see. But clearly, the progress of the situation in the Middle East is a dominant driver of the oil market right now.
Well, good morning. I like one of the stories that we put out this morning, which is Biden is going to struggle to try and batten down both on Iran and their exports, which we know are strong-willed, especially to China, and at the same time try and readdress the political narrative and the supply narrative with Russia. I mean, we're only like a couple of headlines away from $100 oil. Is that the biggest issue at the moment, the Russia-Iran balance of power in the oil market?
Well, as you know, Manus, the US has been concerned to try and keep the oil market fairly well supplied. It is a huge political issue, and we're going into an election year. And I think that the Biden administration won't want to see oil prices rise too fast. It can avoid it. But at the same time, there are political imperatives that might suggest that they may want to look both at Iran and Russia. On the Russian side, the price cap, which is one of the flagship policies of the administration, clearly isn't working anymore. Russian oil is selling at the market price and a long way from the price cap. And then on Iran, given the situation in Israel, there is a lot of pressure to clamp down on those exports that come freely. So they will probably have to act on both. How much they can really change is another question. And I think that a lot of people in the market think the Iranian flows in particular, which mostly go to China, are fairly well insulated from US action at this stage.
All right, Will, great to get your thoughts this morning. Will Kennedy there from the energy team. Now let's get to some of our other top stories that are trending on the terminal this morning. Poland's opposition is on course for majority after Sunday's election, an upset that would deny the ruling nationalists a third term and seek the country re-engaged with the European Union. And over in New Zealand, voters have picked a centre-right government to manage the mounting economic challenges in the aftermath of the pandemic. Christopher Luxon set to become the nation's new prime minister after his national party won the biggest share of the vote in Saturday's election.
Well, on Capitol Hill, Democratic leader Hakeem Jeffries says informal talks surrounding a possible bipartisan solution to the speakership situation is underway. The House has been without a speaker since October the 3rd. Representative Jim Jordan is currently the front runner for that position. Danny.
And elsewhere in the U.S., pharmacy chain Rite Aid has filed for Chapter 11 bankruptcy protection and said it will shutter more stores. It also said it clinched a restructuring deal with holders of its senior secured notes and appointed Jeffrey S. Stein as CEO, citing his expertise in turning around companies.
Well, coming up, we speak to Klaus Baader, global chief economist over at Societe Generale, right here on Bloomberg. This is Bloomberg Brief. I'm Manus Craney in New York with Danny Berger in London. The U.S. plans to tighten curbs on China's access to advanced semiconductors and chip-making gear, closing the loopholes from last year's measures. The Biden administration will add Chinese chip design firms to the trade restriction list and impose additional checks on companies attempting to evade export controls by routing shipments through other nations.
Now, at the same time, Manus, China's central bank is making the biggest medium-term liquidity injection since 2020. This is as the PBOC steps up efforts to support the nation's economic recovery and debt sales. Now, Beijing is considering a new round of stimulus to help the economy meet the official annual growth target of around 5%. Joining us now is Klaus Baader, global chief economist at SocGen. Klaus, great to see you. Look, one thing, and I know we've talked about this idea before, of when does the stimulus actually add up to something? A great quote from Macquarie on this, saying that there are two scenarios. One of these is that the piecemeal efforts would add up eventually. The second one is that at a certain point, the policy stance would turn more decisive as patience is exhausted. In your mind, are we closer to 1 or 2?
I think at the moment we're closer to 1. I mean, we'll see. On Wednesday, we'll get the latest economic activity data, industrial production, retail sales, etc., for September, and we'll also get already the second quarter GDP numbers. And we think they're likely to point to a bottoming out of the economy. Even though the year-on-year rate in GDP is going to slow, that's really a base effect. The sequential growth is likely to have picked up a bit. The same is true for industrial production. Retail sales should be better. We also had some better news from the Golden Week. And there seems to be, although it's a bit stop-start and one has to be careful, a little bit of an improvement in the real estate sector. And that's, of course, absolutely key. One thing that I think is helpful, we're seeing this right across the Asia-Pacific region, which is an improvement in exports. And that should favor a little bit of an improvement in industrial production in China as well.
Klaus, we're obsessed with benchmarks, and the world is focused on 5% growth in China. I look at some of the numbers. The lending, new yuan lending in September was 2.3 trillion yuan, 1.4 in August, the month before. So you're looking at a 14-year low. When you see that kind of a ratchet higher in new lending and social financing as well, up 36% from August, how quickly can that deliver towards the 5% target? Or is that going to take a heck of a lot longer?
No, I think it'll feed through, relatively quickly. It is, of course, a reflection of the fact that the Chinese government is trying to stabilize the real estate sector. Now, I stress the stabilize because, Xi Jinping's line still is that, as he says, housing is for living and not for speculation. And they don't want to reignite another major housing bubble. But I think that does feed through, relatively swiftly. And I think we're seeing that. Really, to a large extent, of course, the higher lending figures, or in particular the higher social financing numbers, are just a reflection of the government stepping up its stimulus measures. I think the big question is, will it require, and I know that your reporters have been speculating quite a lot about this, is the central government going to issue in scale central government bonds and stop relying on the local authorities leveraging up, which has been until now the strategy?
I mean, there are hints of that, right? Stimulus coming in the form of infrastructure spending, for example, which would seem more, again, central government-led. But again, it comes down to this thing which we have talked about before, the ideology of Xi and the type of economic stimulus they do. I mean, does it need to get really bad to kind of resort to something, again, which seems more Western in nature?
Yes, but I mean, we talked about this last time when I was here. I mean, how much infrastructure can you build? China infrastructure is, pretty good. I'm not saying that nothing can be done, but they're I think decreasing returns to scale on this. Stabilizing the housing sector is clearly important, and we do seem to be seeing some progress towards that. What I'm more concerned about is the confidence in the private sector. And that has clearly suffered. There have been a number of quite aggressive steps against private sector companies and sectors, I should say. And to really get the economy going again, I think you have to reignite confidence in that sector. And I think that's going to be hard. And I don't really see a wholesale shift in the attitude of the political leaders towards the private sector.
Klaus, it's interesting, isn't it? Housing is for living only when the market turns south and everything collapses. It's amazing how the headline can change. It was punting and huge speculation. Let's not decry what the housing market was in China for a long, long time. So the tune changed because the market changed. Let's just broaden the context. We're debating sticky inflation in the West, but we're debating disinflation or flatlining inflation, disinflation in China, or deflation. What is the global risk from China, or is it contained? Is China less of a risk globally? I think the last time you were in, you said than perhaps we all think. It just doesn't have the muscle for the world on the inflation narrative that it used to.
Well, that's quite right. You're right. The latest CPI numbers that were released last week were weaker than expected, and they showed a drop back in the annual rate from 0.1% to 0%. The question, is China going to export deflation to the rest of the world,
Yep.
is a different one. I mean, in some ways, if they did, hurrah, keep it coming. We do have an inflation problem in the rest of the world. But I looked at specifically what drives, what's the channel for the impact of Chinese price dynamics on the rest of the world. It's obviously not CPI. It's much more in producer prices, and there specifically on consumer goods. And when I looked at consumer goods producer prices in China, and they actually looked less deflationary than they did in the past. So at this stage, I don't think that China's impulse really is substantial in terms of fighting or contributing to the fight against inflation. At this stage, it would have to decline a lot. Now, there is, of course, the effect of the exchange rate. The exchange rate has been a bit weak, so that would enhance the weakness of the numbers as terms relative to the domestic numbers. But no, I really don't think that either China is a major factor in deflation, nor do I think it's going to have a huge impact on global economic growth either way.
Klaus, thank you very much. Klaus Baader, Societe Generale, our guest this morning on all things China. It will define, in part, the market risk for this week, right here on Bloomberg. Quick check on your currency markets for you as we go to break here. You've got the Aussie rising. There is stimulus on the way in the form of the biggest cash injection in China since 2020. It moves the Aussie and the yuan lower. Welcome back to Bloomberg Brief. I'm Manus Cranny in New York.
And I'm Danny Berger in London. Here's what you need to know. Back channels to Iran are open, and the U.S. warning against escalation of the Israel-Hamas conflict. President Biden may visit Israel in the coming days, adding to the U.S. diplomatic push after Antony Blinken met with Arab leaders over the weekend. Elsewhere, the U.S. administration plans to tighten sweeping measures to restrict China's access to advanced chip tech as Beijing steps up efforts to support the country's fragile recovery. And on Capitol Hill, Democratic leader Hakeem Jeffries says House Democrats are having informal talks with their Republican colleagues about a potential bipartisan solution to finding a speaker. Now, it is the hope of those back-channeling talks. More calm, potentially no escalation. It's what's allowing us to buy risk, not in a big way, but in a slight way, up about 1/10 for S&P futures after a tough Friday, despite banks outperforming. Morgan Stanley says that it's going to get more challenging for the fourth quarter, given some of the technicals, some of the internals. You have a bit of a break this week, but next week it's going to be the busiest week this quarter for earnings season. European stocks, those continue to fall. Shell, though, that is trading at a new record. It's had quite the run thanks to higher oil prices and really strong earnings that we saw earlier this month. Meanwhile, China, man, is that one down 1%. A couple things going on here. You have the U.S. trying to reinforce some of the chip curbs and more stimulus coming from China and more strict rules when it comes to short selling. However, that's not helping us, catching down some of what happened on Friday. Again, 1% lower for the CSI 300, Manus.
OK, Danny, well, when you look across the assets, you can see this pause as there is a belief that the back channels are open and that something of significance may be delivered. Yields rise, and as Hoisington say, it's been a very humbling year for the bond market participants. A lot of the bond market is long at 3.75%, but there's been no massive capitulation yet. Bonds did act as the hedge in the hell of war last week, but the reality is, of course, the hell that is pernicious inflation, as one of our guests says, can come back to bite you. At the moment, the bond market seems to buy into the back channels have got potential and legs, whether it's the Qataris or the Chinese that can perhaps help de-escalate. Our next guest says they want to be long the dollar on a rate story and indeed on a geopolitical angst. You had 4 weeks of a rally in the dollar. Euro dollar at the bottom of your screen, by the way. JP Morgan are talking about parity again. So the dollar's ascendance is only temporarily interrupted in the narrative that is back channeling. That is today's headline. That is what takes the heat out of the dollar. It also gives you a tiny bit back to the euro as well. Oil is down by 1/3 of 1%. This is nothing to what it did on Friday. It romped home by 6% on Friday, 7% on the week. The hedge funds are slashing their longs. For now, this sweep of assets is saying to you the markets right now believe in the back channel narrative for now. Danny.
Yeah, and Manus, another, again, risk we have to contend with is China, too, issuing more stimulus. Of course, our last guest from SocGen just did tell us that he thinks growth is going to set to bottom in the data that comes out this week.
Yeah, it's going to be push and pull between geopolitics and any de-escalation or a ground assault. And, of course, the macro level. What can China do to send a signal we're at the bottom? Danny.
Right. And for the moment, as you mentioned, Manus, despite a slight reprieve today, it's been a story of stronger dollar. Joining us now is Peter Kinsella, Global Head of FX Strategist at Union Bancaire Privee. Peter, I mean, what does stop the dollar at this point? Is there anything that you can see, at least that isn't a tail risk at this point, that can really stop the dollar's charge higher?
Hi, Danny. Look, I would say no, not at the moment. You've got 3 or 4 things going on. We've got very, very high front-end yields, and that's very supportive for the dollar in the current context. We've also got steepening long-end yields. And in the context of slowing economic growth outside of the US, negative data surprises, that's, again, very supportive for the dollar. Third, you've also got the geopolitical risk and, indeed, the risk of that spiraling and getting worse. So there's really nothing nothing standing in the way of the dollar from an external perspective anytime soon. I think what would eventually be a catalyst for a slightly weaker dollar would be a turn lower in the US labour market. But again, we're not really seeing that anytime soon. So coming to the fourth quarter, it's really all about the greenback, I'm afraid. And it's very, very difficult to bet against it at this point.
Well, good news for Manus, who just moved to the US.
Good for him.
Yeah, you know what her problem is? She's just looking for a nice gift for Christmas, and it's not happening. It's all in her imagination. The rent has taken most of the money, Peter. I just want to leave you with that thought as you travel globally. OK, so you want to be long in the dollar, both on rates and on geopolitical angst. I get that. That is a classic trade. I want to challenge you slightly because the Swiss rallied on Friday. So if I pivot to, you're long dollar, you want to be long yen, or you want to be long Swiss. The Swiss behaved as it should do. In a climate of a pause from the Swiss National Bank, it managed to rally. My question to you is, you've upped your target to 94 on dollar Swiss by the end of the year. Given the level of unknowns in the geopolitical arena, do you reappraise that? Do you think that the Swiss can re-anchor itself as perhaps more of a haven relative to dollar?
I would say no, in the context that certainly with the dollar you've got much higher levels of front-end carry and indeed back-end carry as well. And that's obviously more supportive for the dollar than the franc. We've got the S&B, which is effectively stating that it's on hold. And I think from a structural perspective, I think the important thing for the S&B is that it stated that of its inflation, it's all pretty much domestically generated at the moment. Previously, they said it was externally generated. And what that means is that the S&B can take a step back from these heavy interventions they've been undertaking, basically selling the dollar and buying the franc. And that would probably reduce, I would say, the scale of any potential franc rally. Technicals are also supportive. You know, we've sort of bounced above the 200 DMA in the last 3 or 4 days. I think that's likely to continue. So overall, where we were in an 85-90 range in dollar Swiss, I think now we're a little bit higher, between 90 and 95 coming into year end.
Now, another forecast you've readjusted is your one for the euro. You're just above parity for year end. We have seen the calls for parity really start to reaccelerate. How much of that is, again, what we're talking about, the dollar strength versus a Europe-specific story?
Okay. Certainly the dollar leg we've discussed.
Right.
On the euro side, look, we're seeing negative data. That's very, very clear. And certainly if we look at the ECB's last rate hike, the markets interpreted that as being a policy mistake, which I agree. And additionally, if we look at euro, in an environment of higher geopolitical risk, but also higher oil prices, that deteriorates the Eurozone's trade account. So, look, my year-end target on euro-dollar around 102. Is parity possible? It definitely is. I don't think we're going to see 95 as we did last year, just on the basis that sort of gas prices are much more stable than they were. But a move towards parity is a possibility. It's not my base case scenario.
You also warn on the terms of trade in regards to Europe, and you talk about a dissipation of that. Given that your base case now is a policy mistake, so we're in a live policy mistake, we're in a triche moment, to coin a phrase. What does that mean for... I know, battle that if you can. What does that mean for 2024? Does that mean perhaps faster and more aggressive rate cuts than we are presuming?
I would say vis-a-vis policy mistakes, it always seems to happen when we have French ECB governors.
Oh, an Irishman having a go at the French.
Fighting words.
Yeah, that's fighting words at a rugby weekend, kid. Go on.
Indeed. We're both lost. Vis-a-vis the policy mistake, look, what's actually happened is that the market has certainly priced in earlier than expected rate cuts. And if you look at the overnight index swaps, I think they're pricing in the first rate cut probably by June of next year. So whereas previously it was a bit longer. So it more or less indicates that they seem to think that this was just a bit too much too soon from the ECB. We'll have to see how the growth data develops, but certainly I wouldn't anticipate a cut anytime soon, certainly at least in the next 1 or 2 quarters.
Can I ask why this is a policy mistake? Because there are plenty of people who said, look, one extra hike isn't going to break things. So why is it a policy mistake?
Well, they said that in 2008, and they also said it in 2011, and it did turn out to be just a bit too much. Given that we are seeing global disinflation, as a previous guest noted, we are seeing, negative Chinese PPI. We're seeing sort of, in the US, shelter effects coming off. We're going to be in an era of falling inflation. So hiking now just seems a little bit too much, I would say, and possibly it's on the growth perspective, it's looking pretty poor in the Eurozone, let's face it.
So what if oil makes it to $150? What does that do to your theory of disinflation?
I think we'll have to revisit our models and see where we're going.
But, okay, I'm being unfair by throwing $150 at you. The reason why I do is because Danny mentioned it, and we've looked at it. Zia Dudes run the numbers on a deep escalation risk. Sure. There's a risk of $150 in a global recession. So I should put some context around it. But we are one breath away, Peter, away from $100 oil. Does that shift any of your FX thinking?
Well, it would do in the context that certainly if we saw higher oil, it basically means that you're likely to see growth surprises, negative growth surprises, particularly for oil importers and energy importers. That's obviously very, very bad news for the Eurozone, to a lesser extent for China as well. I would say it's relatively sanguine environment for the dollar, given that they're just a small net energy exporter. But again, the dollar will do perfectly well in that environment because it's got very high carry. At the margin, it's probably bad news for certain of the high beta currencies, Swedish krona, sterling to a lesser extent. But again, pretty good news for the energy exporters, right, as usual. So it's again this bifurcated regime, which we would see. The only thing is, and I think it's important to note, is that if we were to see such a spike, it probably wouldn't be that long-lived, right? Which would, I think, sort of truncate any of these longer-term effects.
Peter, we've run out of time for the other 150, and that's $150 yen. So you're off the hook for this time. Come join us. Come join us when it goes through the level, because I know you think it's happening soon. I mean, certainly looks like it is. Peter, thank you very much. That's Peter Kinsella of Union Bancaire Privee. Now, coming up, President Biden is weighing a trip to Israel with Anthony Blinken for the second time, adding to the U.S. diplomatic push. This is Bloomberg. This is Bloomberg Brief. You're looking live at the principal room. Coming up later today, an interview with the global head of restructuring group at PJT Partners. That's at 11:30 a.m. Eastern, 4:30 p.m. in London. This is Bloomberg.
We work around the clock. Teamwork with the united front. The unity within us conveys a clear message to the people, the enemy, and the world. If Hamas thought we would fall apart, then no. We will tear Hamas apart.
That was the Israeli Prime Minister Benjamin Netanyahu speaking as the US and its allies ratchet up the efforts to prevent a war between Israel and Hamas from engulfing the wider region. And therein lies the point. Bobby Ghosh is our Bloomberg opinion editor and columnist. You've had a busy weekend, Bobby. Good to see you this morning. We're using the word back channels. It's everywhere in every story. But this is juxtaposed. We're readying with 300,000 troops on the border of Gaza to launch a ground assault, and yet we are focused on the back channels. What kind of back channel and who's going to be the strongest back channel that can really de-escalate this situation?
Well, the United States is the obvious channel to the Israelis, and it's not a back channel. It's up front. The President of the United States is openly stating what he'd like to see. The question is, who's the back channel to Hamas? There are several candidates. Qatar has traditionally played that role to try and get hostages out. Egypt is the neighbor that has always played a role in crises like this. Turkey is an important player. A lot of the Hamas leadership lives in Turkey. The Turkish President Erdogan has close relations with them. He has been on record to say this is not a terrorist group, this is a resistance group. That gives him the ability to talk to them. We know what's going on in the conversation with the Israelis because it is happening in the open. We know much less about what's going on in the conversation with Hamas. We also don't know whether Hamas is interested in listening to any conversation, back channel or upfront.
To the point, Bobby, and good morning to you, Danny here in London, of Egypt. We did have President Biden speaking on 60 Minutes saying that Egypt should be getting more women and children out of the conflict zone. How realistic is it for Egypt to play that humanitarian part in this?
Well, Egypt has traditionally taken the view that they want to help, but they don't want refugees. The argument has been twofold. One is that allowing refugees into Egypt would create a security risk for Egypt itself. And secondly, and this is a view taken by several Arab states, that if Palestinians leave Gaza, then that lets Israel off the hook. If the Palestinians sort of become refugees once again, then Israel is not under any pressure to solve the Palestinian issue. It's a little self-serving from Egypt's point of view, but that has been consistently their view. We'll help, we'll try to send humanitarian aid in, but we don't want Palestinian refugees on our soil. So for President Biden to persuade President Sisi to allow refugees, that's a very, very heavy lift. That Egypt would have to go against decades of their policy.
But then you have the continuation of a nation of Palestinians trapped. And James Cleverly, the UK Foreign Secretary, said it's in Israel's interest to avoid civilian casualties, Palestinian casualties, because Hamas clearly wants to turn this into a wider conflict. So if the conduit out is not via the south into Egypt, as that's contentious and there are corridors to the north, what is an off-ramp? What can really help the Palestinian people?
Well, this is the tragedy of the Palestinian people. They've got no place to go and nobody wants them, which is why they get stuck in that little strip of Gaza. The doors are supposed to open for foreign nationals to leave Gaza. Hamas has agreed for that to happen. Yep. I worry that we will see a repetition of the scenes, remember, from the airport in Kabul when the United States was pulling out the enormous jam of people trying to get out at the same time. I worry that other Palestinians, those who don't have foreign passports,
just before Danny comes in, just clarify for us what kind of size and scale of numbers could that be that leave Palestine? That's a tiny number, Bobby.
Of the foreigners, yes, just scores. But behind them are tens of thousands of Palestinians who want to get out.
And Bobby, I mean, this does speak to sort of the longer term picture, too, of what is the goal? What is the outcome? What happens after a ground invasion? Manis and I were talking about this earlier, that the idea in the U.S. after 9/11, that long term goal wasn't really there. Do you see anything of that sort for what's happening in Gaza right now?
No, not at all. And that is a matter of great concern. Our news colleagues have been reporting over the weekend that this is a concern for the White House as well. The U.S., in its conversations with Israel, is not seeing a plan for what happens afterwards. President Biden has been saying, don't occupy Gaza, don't reoccupy Gaza. And there are some in Israel who are saying that's a bad idea. But right now, I think the blood is up in Israel. And the events of the previous weekend are still very strong. Images and videos that are still emerging from what happened when Hamas launched that terrorist attack. So there's a strong and fierce determination for vengeance among Israelis, which is completely understandable. And in the heat of the moment, as far as we can tell, nobody's thinking of what happens after the troops have entered Gaza and after they have engaged with Hamas in street-to-street battle.
Well, of course, the U.S. has a lot of history to reference itself, from Saddam Hussein, the toppling of Saddam Hussein, and what happened there, and as it were, no clear end game in sight. Biden, it is understood. I mean, Blinken will make a stop off and emerge. He's just done the whirlwind tour of the Middle East. Yes. Let's see what comes from that. What does Biden, I don't mean get from going to Israel, but do you think it would be wiser to go before a ground assault by Israel? When is the optimal time for Biden to go? What can be achieved from that?
Well, there are two optimal moments. One is to go before and stop it, if at all, if that's possible.
Is that reality?
I don't think it is.
Okay.
The second is to wait a little bit until the ground offensive has begun, and then go in and try to sort of persuade Bibi not to go in too hard and to sort of show restraint. It's a difficult call, and I think that's why there's still, the White House doesn't seem 100% certain. They're saying that the president may go in the coming days. We're not yet hearing of a firm date. The president would like to show support to Israel.
Yep.
That's obviously a high priority. But he also needs to show the wider world that the United States can play a role here in trying to minimize the humanitarian catastrophe that is sort of unfolding before our eyes.
Very clearly unfolding before our eyes. Bobby, thank you very much for getting up early this morning. That is Bobby Ghosh of Bloomberg Opinion. Coming up in the show with Danny and I, we're going to take a look at some of the market-moving events for the week. Quick check on how markets look at the moment. You got the S&P 500. It's a big week for earnings on the tech front. Let's see what those interest rates do to that. The dollar's on the back foot this morning as we use this phrase, back-channeling and trying to find back channels for the Israel-Hamas conflict. And yields rise after delivering the hedge of hedges last week in this geopolitical angst across the world, right here on Bloomberg.
This is Bloomberg Brief. I'm Danny Berger in London with Manish Kranny in New York. Now let's get you set up for the week and a look at what is ahead. Earnings season is going to be ramping up. We get quarterly results from Goldman Sachs, Bank of America, Morgan Stanley, alongside Tesla and Netflix. Now on the eco front, we're going to be getting key data out of China. That includes GDP growth, as well as UK inflation and U.S. retail sales data. Then on Thursday, Fed Chair Jerome Powell is set to deliver remarks on the U.S. outlook and monetary policy at the Economic Club of New York. Now, Manis, a lot of the chatter we've heard from Fed officials has been this idea that the market is doing a lot of work for us. We also heard from Harker last week to end the week saying that the disinflation trend is here. Well, Powell also echoed those comments.
Well, this is his opportunity really to clarify that the higher for longer, you know, there are now new global risks, aren't there, in terms of Israel-Hamas. The Michigan survey, you mentioned it just over an hour ago, inflation expectations are at a 5-month high. So that reality check for the bond market, I think that's what you're seeing this morning. Yields trade higher by 6-7 basis points at the last check. And in many ways, that is because you had that massive hedge that got put on last week in the eye of the geopolitical storm. But, of course, staying with the Middle East, Danny, there is one other stock which is being bruised this morning, Manchester United. Looks like the Qataris have finally thrown in the towel to Mr. Ratcliffe over in the United Kingdom and walked away. I just wonder will they really, you know, they've just gone at this for a year, hadn't they? Manchester United, Jim Ratcliffe and the Qataris.
You're right, and part of this was that the Glazer family really wanted $6 billion for this club. It didn't seem like the Qataris were going that high. So what you get with Radcliffe is a different restructuring of this deal, where maybe even the Glazers are able to retain some. Manis, I've said this before, the Americans are coming for British football, and they won't even leave. They won't even get rid of it, the ones who are already here.
Yeah, but you've not got your British passport, so technically...
True.
Technically, yeah. Ms. Berger, you're actually British. Well, actually, I've got both passports, so I'm grand. It just depends on the day, which nationality, but I'm firmly on my Irish passport these days. Let's talk about Pfizer, because it's dipping as well. They're slashing, you know, after they've slashed their revenue and their earnings forecasts for the year after agreeing to take a number of different hits on a number of different fronts, haven't they?
Yeah, they really have. Some of this has to do with taking doses of a certain medicine back from the U.S. government. But, Manis, it's worthwhile taking a pause here and look at what's happening in this bond market, because that haven bid, it does seem to be abating somewhat. You have yields moving higher, 10-year yield by 7 basis points.
Yep. So last week it dropped by, 19 basis points on the longer end of the curve. So the pernicious, my favorite word of the last 10 days, inflation is the risk. Bloomberg Brief does it for Monday. Surveillance is up next, right here on Bloomberg.